Hi, I'm Teresa from Phoenix Gate Crafts, and today in the Stuff You Need to Think About When Starting Your Business series, we're talking about business licenses, insurance, and business structures. So, when you're selling anything, products, service, doesn't matter, do you need a business license and do you need insurance? The short answer is, yeah, you really should. Now, I'm not a lawyer, I'm not a CPA, I'm not an insurance broker. I don't know the ins and outs. Also, this is one of those subjects that changes a lot from state to state. So I'm going to go over some general stuff that's good to know and to understand. And the reasons why a lot of people do and don't do certain things. You'll see on business forums, a lot of people being like, do I need an LLC? Well, there's a reason it's the most common business structure that people take. So let's start off with business licenses. That's going to be the vast majority, and then let's just stick insurance in at the end because that's relatively simple. All right, business license. Do you need one? In most states, yes, you do. If you make over a certain amount, you should really have a business license. So you definitely need a business license when you make over a certain amount of money. Don't quote me on this. My tax guy told me that if I made under $400 in a year, I basically don't have to report it on my taxes. That may have changed since then. That was a very long time ago when I was about 20. I'm 36 now. And let's be honest, if the government catches you making money and not giving them their cut, you can wind up with very expensive fees and litigation against you. You do not want that. So the big thing that happens when you start your business and you go and register your business with your state, you really need an EIN, which is basically it's a tax ID number for your business. And that way you can pay business taxes. And if you have employees, you need a state EIN so you can pay state taxes for yourself as well as your staff. So, business structures. Do you have to have an LLC when you create your business and go through all the paperwork? So, how do you do your paperwork? Well, it's a little different for every state, but the basic thing you can do is go on Google and say, how to register business in, and then the name of your state. It's very easy. Skip all the sponsored listings and then go to the one that has a .gov, and it's like www.ca.gov because I live in California. Easy. And they're going to probably send you to an information page that is all about what you need to know. That's a very good place to start. You can look into all the specific business structures and the legal requirements for your state for those structures. And that brings us to the big question, what are business structures? Well, this is the way your business is going to be run. This has more to do with ownership and required taxes, and a little bit about liability. So let's get started with this. There are three main business structures, and many of them have sub-structures. The first one is sole proprietorship, and this one's pretty straightforward. You are your business. Your assets are business assets, and the business assets are your assets. When you do taxes, you include your business income on your personal taxes. It's the easiest one to set up. It's also the default one in many states. So if you don't choose a business structure, you are automatically assumed to be a sole proprietorship. So it is the easiest. There's the fewest taxes, because whatever you make, business as well as personal from your job or whatever, all gets taxed on your personal income taxes. The problem with this one is, although it's easy and it's cheap, it also is the one that leaves you most at risk. The big two cases of risk are if you're sued, because in the United States we're a sue-happy country, it is entirely possible you get sued for something that's not your fault. Or even something you did that was just a dumbass mistake. Also, if you need a loan. This one actually happens more often than the suing, but either case, not fun. So the cool thing is you can get a loan for your business through personal funds. You just usually have to have something to secure the loan. And if you own your own house, you typically wind up using your house to secure the loan. And if business doesn't go very well, or a natural disaster happens that puts you out of commission, or a health crisis or whatever happens and you can't pay it back, you wind up defaulting on the loan and you can lose your house because there is no separation between business assets and personal assets. Somebody sues you and they are proven to be right, you can also lose your house or your car, all of your finances. And here's the really bad thing. If you wind up in such a bad situation that you have to declare bankruptcy, your personal credit is ruined for several years. So it's going to be really hard to get any extra loans you need to buy a house or a car, or get a student loan if you decide to go back to school. Because your credit's going to be ruined through the bankruptcy proceedings, that'll really ruin your financial strength for quite a while. So strongly recommend against this one, unless you really can't afford anything else. But there's one cool thing about a sole proprietorship. If you're married, your spouse can be with you on a sole proprietorship. Because when you're married, you and your husband or your wife or whatever are a single entity, a single legal entity. So you and your spouse can be together on a sole proprietorship. However, anybody else who's not your spouse, you're not a single entity with, you can't be a sole proprietorship with them. Instead, you're a partnership. So it's basically the same as a sole proprietorship, except now you can have anywhere from 1 to 50 partners. That number can change state to state, I'm not entirely sure, but we're taught in California in business school, in business law classes, between 1 and 50 partners. So partnership is very much the same thing as a sole proprietorship, except you have more than one person. So because it's more than one person, it's not just your assets on the line that are part of the business, it's the other person's assets that are also part of the business. And oftentimes, partnerships are harder to do than sole proprietorships because of that other owner. Now, you don't necessarily have to be a 50-50 partner with somebody. You could be a 51-49 partnership where one person has the majority vote, so to speak. You can have a silent partner. You can have multiple partners who do not own equal portions. Whatever you do with a partnership, though, the big recommendation is have a business plan and have an agreement on who does what. Partnerships, in my experience, work better if you have two partners who are good at different things. Like you have one person who's really good at the back office stuff, like managing clients, marketing, social media, accounting, that end of things, and one person who's really good at doing the making stuff, coming up with new products, and managing the sales end of things. Sales, packaging, shipping, that end of things. Making sure that, this person's got this responsibility, that person's got that responsibility, and even assign who's going to take out the trash, because kind of like in a marriage, if you're arguing over whose turn it is to take out the trash, the real problem isn't taking out the trash. It's probably something deeper that you actually need to be discussing. But now, because it's written in the contract, at least you won't be arguing about taking out trash. You do have to be careful with your partners because you can very easily be screwed over. One of my childhood friends, her dad, when my friend was very little, was in a partnership business with somebody else. And the partner wound up running off with all of the company funds. My friend's dad wound up stuck with all the bills and responsibilities and everything. Needless to say, the business went under and he wound up having to declare bankruptcy. And as a result, that really affected their ability to buy a house. I mean, they had to sell their house and purchase a less expensive house in a less expensive area because they couldn't have gotten a loan because of the bankruptcy. And it really ruined their family's credit for a very long time, because remember, he also had a spouse who's the same unit. It affected the whole family. So be very careful with partnerships. Not strongly recommended. But that brings us to the third option, which is corporations. And there are many different types of corporations. Well, the most famous kind of corporation is the C-Class corporation. This is your Disney. This is your Apple. I can't think of any others that are on the New York Stock Exchange or the NASDAQ, but all of those are C-Class corporations. They are publicly traded companies. And basically, when you are setting up your business, one of the things you do is you decide how many pieces of ownership your company is going to have. These are called shares or stocks. If you have stocks in a company, you have a share of the company. You are a partial owner. When you start up a corporation, the business is its own entity. It pays its own taxes. It has its own legal coverage, its own legal requirements that are separate from the owners. As a result, there's a separation between business and owners. You have business assets, you have owner's assets. There's separation. The business can own its own stuff. It can have its own insurance. It can have its own bank accounts. It often does. And you really, when you have a corporation of any kind, you want to have separate corporate accounts, separate from your own personal banking, because it has its own separate reporting requirements for taxes. Yeah, but also because of this legal separation, if the company gets sued, the owners are safe. So like Scarlett Johansson sued Disney. I was still an owner of Disney stock at the time. It did not affect me personally. I was not sued. Disney was sued because Disney is a separate legal entity from me. Now, because of this, it is more expensive. Typically, corporations have what's called double taxation. So basically, the company pays its own income taxes based on income versus expenses. And then owners can take paychecks, or they can take dividends, or whatever the structure is allowing, depending on the type you have. Then the owner has to pay their own income tax on the income they make from the company. So, not to mention, most corporations, C-Class in particular, has the largest number of fees for the government. It is the most highly regulated group of businesses. So C-Class corporations are the most expensive. There are, however, less expensive corporation types. For example, privately held S-Class corporations, also known as S-Corps. I don't know too much about S-Corps. I know that they were originally my idea for business structure before I learned more about the next one, which is LLCs. But they don't have nearly as many fees and things in terms of taxes. It still has the separation of assets, but because it's privately held, only a maximum of 75 shareholders, it's not publicly traded, it's not nearly as expensive or quite as rigorous as a C-Class corporation. But the one that's most popular is an LLC, which is a limited liability corporation. Some states don't have LLCs. They might have an LLP, which is a limited liability partnership. But my understanding is they operate very similarly. Basically, you're still a corporation. You have the separation of assets, but you do the taxes for your company at the same time you do your personal taxes. So it's a little easier. Also, in terms of fees, there was only an $800 fee that I had to pay at tax time in order to keep my company running. Now, you can have more taxes on top of that, but I never made enough to warrant that. I mean, all companies do have like a $20, $25 fee you have to pay for renewal every year. That's separate. And every state's a little different on those kinds of requirements too. If you're starting up your business, it's probably the most cost-effective structure to start with that still gives you some legal protection without being, ridiculously expensive about it. That's why it's kind of the most popular for small businesses. As you grow, you can always change your business structure. You can upgrade or downgrade as needed. So, you hear a lot of things where a company starts out as a partnership and eventually it changes to being a corporation. That happens a lot. And what's best for you is not necessarily what's best for me. So definitely talk to a lawyer and a CPA, because what might be best for you legally is not necessarily the same as what's best for you from a tax standpoint. So you want to get both of those perspectives. And like my LLC, I actually set up with a lawyer. So I really like doing that. It was an $800 fee. I got a 1-hour consultation with the lawyer, so that way they knew exactly what paperwork to do. They got the paperwork started. All I had to do was either physically sign or DocuSign a lot of it. And then they filed it. They gave me a handy binder to keep all of my paperwork in. And they gave me like official business seals and business return labels as part of the package. I also was able to consult with the lawyer anytime within the first year about the startup. It was all covered in that $800 fee, plus any additional fees required by the state, of course. So, and by doing it that way, I knew that I was getting it properly done, and the lawyer was going to legally back me if there ever became an issue with my startup paperwork. So I could rest assured it was one thing I didn't really have to worry about out of everything that was happening. I also consulted my tax guy about how to handle things. We had a 1-hour consultation where he talked about the things that I needed, that I could list for deductions and how to do that properly, when I needed to do taxes, what reporting was required, and that way I was doing everything as I was supposed to do it, and that way I had good qualified information. Really helped me out. Brought me a lot of security of mind. So that's why I don't talk about this too much. I don't know the entire process. I just got told, here, sign this thing. Double check that the information's correct. I double checked, I signed it, I scanned it and sent it back, and later I got my binder. Highly recommend, but if you don't have the funds for it, you'll have to do it on your own. Google is your friend. Now, insurance. It's fun stuff. The person you should consult on this is a broker for your region, because they're going to be able to cost compare different providers with the kind of insurance that you need for your business. As I'm aware of, I don't think any states require businesses to have insurance the same way that states require us to have insurance to drive. However, the whole reason to have insurance is under the hope that you never have to use it. So there's like product liability insurance is a really big one to have covered. But people are stupid. That's really what insurance is about, is that people are stupid. You might do something negligent by mistake. Somebody might do something stupid. Like one lady I know of who sells candles went over to her friend's house and saw a candle she'd made was lit, and it was in front of an open window, and the drapes were blowing over the lit candle, and no one was paying attention to it. Like, customers can be real stupid. And when they do stupid stuff, sometimes they sue you. Sometimes they do stuff and there's an issue with the product and they'll sue you. So having insurance definitely helps with the peace of mind for that. And you're like, well, it's so expensive. There are ways to reduce the expense of the insurance policy. The big one being doing everything in your particular industry to limit the chances of something going wrong. So to continue with the candles example, so having things like making sure you have extensive records of your tests, making sure that through that testing you have consistently good, safe candles that meet safety standards. Making sure you have a warning label on your candle, making sure you have instructions or a care card telling people how to properly use a candle. You can't make people read it, but not having it means you didn't do your due diligence and things like that. With my tutoring company, I did several things that reduced my risk as a client. I did background checks on my tutors. I went through with the tutor and the client all of the rules for tutoring, including payment schedule, as well as making sure they knew that they needed to have a chaperone present provided by the parent who was at least age 21 or older to be on the premises where tutoring was taking place the entire time. And I made sure that my tutor had training on the fact that if there was no adult present, tutoring did not take place. The tutor left the premises, basically stepped out the door, and called the parent to see when they'd be coming home. If no parent would be provided, tutor left. Tutor is not responsible for the child. It is the parent's responsibility. And usually this wasn't an issue with little kids who couldn't be left home alone. This was usually an issue with middle schoolers and high schoolers. And because I did this, my insurance was a fraction of what it would have been had I not done these things. But also, here's hoping you never need to use your insurance. I had my insurance policy for 3 years and I never had to use it. Another thing to consider is if you're doing any like vending events, like markets or trade shows or anything, sometimes a venue is going to require that you have an insurance policy. For example, the dance studio I used to dance at as a kid would do their performances and demonstrations at a local public school in the auditorium. And the school required that the studio have a $1 million policy in order to rent out the space. Fortunately, my dance teacher never had to use the policy, that nothing tragic ever happened at one of these events. But it is one of those things of sometimes it's just a requirement of what you're trying to do, and it's a good idea to comply. Personally, my personal belief is that it's better to have it and not need it than to not have it and need it. But ultimately, the decision is up to you. So I hope this clarified a few things. If you have any questions, please feel free to ask them in the comments. Our next video is going to be on starting inventory and what to think about with regards to that. Anyway, happy crafting. Bye.